It's interesting. A lot of people in the Bitcoin space look at Mark Zuckerberg and Meta as perhaps the next to follow suit. And it's specifically because of what I mentioned, where it's still a founder-led company and majority shareholder-owned. Companies and the individuals that find Bitcoin are the ones that are in the need to know. It's the companies who need a second chapter. They need a new way to fuel enterprise growth. Our goal is aligned with the company to grow their Bitcoin position and take the long time horizon view with them that Bitcoin is going to appreciate over time. Early adopters of that get more of the love and appreciation from the Bitcoin community. And now it seems like every other day we're seeing a new company announce that they're adopting a Bitcoin Treasury. And so some of the marketing magic is wearing off. You can treat Bitcoin at fair value on your balance sheet. That's huge. That was only as of January 1st this year. So that was a deal breaker for most corporations to want to get into the space. These companies are basically looking to treat their entire treasury as Bitcoin being their new hurdle rate for the incremental dollar that they would invest in a new line of business.
Hi, Chase. How are you doing? Everything fine on your end?
Yeah, doing great. Lovely to meet you.
Really, really cool. Maybe before we get started, give the people some background, who you are and why you're excited about Bitcoin.
So I'm kind of your entrepreneur operator. My parents were serial entrepreneurs, so I grew up helping them operate some businesses, started a restaurant with my dad when I was 16. That restaurant's now 19 years old. Got my degree in entrepreneurship, small business management, so background in economics, finance, accounting, all of that. Everything to do with starting and operating businesses from scratch. Ran a technology company that I founded out of college for about a decade called Creditor that was in the online media space, and have been kind of a secret closeted Bitcoiner since 2016. It was almost a distraction to running that business in a way, because as you know, once the Bitcoin bug bites, it kind of takes over your intellectual curiosity. And then I reached out to the on-ramp and early riders folks in middle of last year, and they were looking for somebody to come on as CEO for Acropolis, where I am now the CEO, which is a company that's helping simplify and scale corporate Bitcoin treasury adoption. So that's the seat I'm in now, and I'm helping get that business off the ground.
Super interesting. Why did you say secret Bitcoiner? You were not telling people, or?
I was telling people near me, of course, because you don't want to have the survivor's guilt. You want to bring everyone along with you. And luckily, a lot of the people around me and near to me in my life followed suit and are pretty big Bitcoin and MSTR bag holders. And so they're all very happy with me these days. But closeted in the sense that I was not public online. I was not tweeting about it. I was not posting about it. I've been deep in the space for a while, but until I was working a job in a Bitcoin only company, it didn't make sense for me to be public facing. I just didn't want to worry about somebody knocking on my door, if you know what I mean.
Interesting. So you were worried that something happens when you're a public persona and in Bitcoin also.
Yeah, I'm always been very easy to find. And so I didn't want to also have that target on my head.
Interesting. So it was not about a business decision. You're like, okay, maybe I lose a client or something, or there's some other risk you were for your own security risk.
Yeah, just me and my wife and the family inside the house, just not trying to call too much attention to ourselves at that moment in time. But now, and I think you're a fan of this form of custody as well. Now we use multi-institution custody. So, most of our Bitcoin is held with 3 separate institutions that are all individual key holders. So no more kind of money at my fingertips per se, which puts a lot of us at ease.
100%. It's the thing that I always tell Bitcoiners that have an amount of Bitcoin that they really don't want to lose, and could be an incentive for someone to take whatever the amount is. Maybe for someone it's 0.1 Bitcoin, for someone it starts at 1 Bitcoin, for someone it's maybe starts at 10 Bitcoin, whatever the amount is. You don't want that at home where you can access it in a short amount of time. You want to have it distant from you.
Yeah.
And as hard as possible but still available for you with some hoops. So if someone comes, you can literally tell them, I would love to give you your money, but I physically can't. So you can kill me, you can torture me, but one thing I cannot do is give you my Bitcoin. I'm super sorry.
Yeah. No, that's exactly right. With the Bitcoin that I do hold in self-custody, I have keys in different countries.
Yeah, absolutely. That makes a lot of sense. But let's talk about Bitcoin as a treasury asset for companies. Let's start with a little bit of history. How did this get started? Because I think like 2020 was kind of the starting point with MicroStrategy, with the first publicly traded company. And how did we come here? How early are we? And what kind of is your understanding of the state of Bitcoin treasury that we are currently in?
Yeah, so I actually had Bitcoin Treasury for some of our family businesses dating back to 2018. So got into Bitcoin 2016, orange pilled my dad and other family members sufficiently by 2018 so that we could take some of the family business and use a Bitcoin Treasury. But at the time, it was very difficult. If you don't have an avid and somewhat technical Bitcoiner in your life to help you with that, basically your own Bitcoin strategy officer, then it's really hard to execute on that in a way that is secure, responsible, in a risk managed way that doesn't risk the operating business. So Mason Carter, my co-founder at Acropolis and principal at Early Riders, he started Acropolis middle of last year with, like I said, the mission of simplifying and scaling Bitcoin corporate treasury adoption. And so we've been at it since then. And yeah, the reason why Bitcoin makes sense as a modern treasury reserve asset is because everything else, all the traditional treasury assets, fail to keep pace with inflation. So if you're living amongst inflationary times, your real rate of return is not keeping up with the stated CPI. And so there's all these other properties that Bitcoin represents on the balance sheet, things like its 24/7 global liquidity, the fact that any holder who's held for 4 years or more is in the profit, the fact that there's no CEO, no marketing team, no product roadmap. There's not going to be any scandals because the Bitcoin CEO got caught up in something. And companies themselves have this regulation where they can't hold up to 40% of their balance sheet in securities, or they'll be deemed an investment fund. And so even things like the IBIT spot Bitcoin ETF doesn't make sense for a company. They're going to have to learn how to hold spot Bitcoin if they ever want to hold more than 40% of their balance sheet.
That's an interesting insight. I didn't knew that you cannot hold more than 40% of securities. So, but you can hold 100% of your treasury in Bitcoin if you hold them in self-custody.
That's right. Yeah. Because Bitcoin is a commodity. You can hold as much of it as you want, and you can even go past 100% if you're somebody like Michael Seyr and MicroStrategy and you want to lever up.
Absolutely. I want to come to MicroStrategy a little bit later because it's just so fascinating. I remember those times when I was like, oh, they were like 100,000 Bitcoin. And I was like, will they ever get to 1% of the supply? So like 210,000. And now we're over 500,000. And it's not that long ago that you talked about that. Like literally they started just 2020. So that's not even, I think, not even 5 years in. It's really fast how they did it. But first, I want to talk about maybe related to that. Why not more companies do that? MicroStrategy has been around for almost 5 years now. They have done it really good in the public eye. Then there are multiple companies that kind of followed suit that are also doing really great. Then, of course, there are like private companies, as you said, and as you've done in the private sector that have made that strategy already beforehand. So there are examples and playbooks, and also the regulatory framework seems to be more and more favorable now. Why aren't more companies doing that now?
Yeah, all the regulatory hurdles are out of the way now. Things like the FASB rule changing, where you can treat Bitcoin at fair value on your balance sheet. That's huge. That was only as of January 1st this year. So that was a deal breaker for most corporations to want to get into the space. But the reason that we can look at Michael Saylor and MicroStrategy, or Semler Scientific and some of these other companies, is ultimately that they didn't have to do the consensus building in the same way that a typical corporation does. Michael Saylor is still a founder-led, he's leading a founder-led company at Strategy. He's majority shareholder. So if he's sufficiently an orange-pilled in his own life, he can pull the company in whatever direction he wants. Now, obviously, there's some level of investor relations and corporate communication and stakeholder engagement to get everybody aligned on the strategy so that you're not scaring folks out of your stock or running highly talented employees out of your business. So you do want to communicate the plan. But to some degree, Michael Saylor could have executed on this without anybody else's input or approval. And the reason that we don't see more public companies doing that is simply there's not that many other public companies that are still founder-led, majority shareholder owned. Usually when you're a public company, the shareholder base is become distributed enough that the founder is more operating the business on behalf of shareholders and has to deal with a board of directors of 7-9 people that they need to kind of have sign off on anything that would be this kind of new from a strategy standpoint. So we see a lot more success with middle-sized, large private companies where the CEO is still basically the dictator within that organization, and they're orange-pilled in their own lives, have Bitcoin on their personal balance sheet. And those are the folks that can really take the decisive action and move the company into a Bitcoin Treasury strategy in a matter of just weeks.
Yeah, it's super interesting with MicroStrategy, and there aren't that many big companies that are founder-led. I always look at Facebook as an interesting example. I mean, Mark Zuckerberg could be someone that is into Bitcoin and not be super vocal about it. He made some tweet, I think and not tweet, Facebook post in 2021 around his goats that he calls Maxi and Bitcoin. Mm-hmm. So he definitely has, there's no way he does not have Bitcoin. And he could, I think, from the shareholder perspective, probably move Facebook in that direction. I don't know how exactly it looks. Is that your best guess of what company will actually first adopt a real Bitcoin strategy? Or is there some other company that you look at? I mean, there's Tesla, obviously, with 10,000 Bitcoin. But I don't know if that's a real Bitcoin strategy. It's probably the amount is not high enough for it to count in my eyes. I mean, 10,000 Bitcoin is a lot of Bitcoin, but not for Tesla.
Yeah, it's interesting. A lot of people in the Bitcoin space look at Mark Zuckerberg and Meta as perhaps the next to follow suit. And it's specifically because of what I mentioned, where it's still a founder-led company and majority shareholder owned. Because, for example, you have Tim Cook, the CEO of Apple, who's publicly stated that he owns Bitcoin and believes in its long-term potential. But Tim Cook does not have the majority shareholder or founder-led ethos to kind of lead the company in that strategy. So we don't hear many people talking about Apple, even though they have the most cash on their balance sheet out of, I think, any company in the world. So do I think Mark Zuckerberg will be the next to do it? I actually don't. I think that you're going to see more things like MicroStrategy and GameStop and companies that have essentially stalled out on growth and are hesitant to invest in new product lines, new markets, because they have cash on hand, they have a decent treasury, but they don't necessarily believe that the next product line they're going to create is going to generate the return on that investment that they would like, and definitely not one that would at least keep pace with Bitcoin's compound annual growth rate. So, and Michael Saylor says this a lot, basically the companies and the individuals that find Bitcoin are the ones that are in the need to know. It's the companies who need a second chapter. They need a new way to fuel enterprise growth. those are the companies that start looking for solutions to a problem. It's the Mag 7 that, they're doing just fine. They're doing well with the strategy that's in place. They can kind of just keep operating on their existing roadmaps, not deviate from course too much, and they're doing quite well in the public markets, so they don't need it.
It's so interesting because they have such a huge pile of cash. It would be so easy for them to really accelerate. I guess they might just trigger some real. I just have in my head, what if Apple really comes out on an earnings call? Yes, we will deploy 5% of our balance sheet into Bitcoin, which would be so huge because 5% of the balance sheet is just like such a huge amount of cash. That ripple effect that all of a sudden everyone will ask the Alphabet board members, oh, like, what are you doing? Then all of a sudden Meta and Amazon and all those it seems like the big 7, or like even we can even say the big 50 or whatever companies that are in those pellets, if like one solid one is really going after something and announcing it in a real manner of like, oh, we have 5% of balance sheet now from now on into the future, always in Bitcoin, or let's say 10% or something like that. That would be that would be huge.
Yeah, and we saw GameStop, which, is nothing compared to the balance sheet of an Apple or these other Mag 7. But the companies that are announcing Bitcoin treasuries are getting bigger and bigger. They're getting more conviction around the percentage to allocate too, right? It's not just a 1 to 2% allocation. These companies are basically looking to treat their entire treasury as Bitcoin being their new hurdle rate for the incremental dollar that they would invest in a new line of business.
How do you look at actually GameStop? It's such an amazing story, a dying company that got saved by some meme kind of, and now maybe gets a second life, a huge second life of Bitcoin.
It's funny. It's in a way it was the short sellers who gave it life, right? Because they shorted the company so much that there became this opportunity for the retail crowd to kind of use that levered position against them and revitalize the stock. So yeah, it's an interesting story. I'm not a holder of GameStop because personally I think MicroStrategy kind of has the runaway network effects, and they're going to have greater volatility. And I just don't think any other company is ever going to catch the number of Bitcoin that MicroStrategy holds. But it's, it's still yet to be seen. We actually haven't seen GameStop announce their first buy yet. And I think it's kind of funny because I think a lot of the shareholders were hoping that they were in market buying during this recent dip. But, now we're back up to 93, 94K. So it'll be interesting to see if Ryan Cohen and the team executed on the Bitcoin purchase, or if they were still trying to get their ducks in a line. Because that's the other thing. The larger the company you are, the longer it takes, the more boxes you have to check with compliance and communicating the strategy beforehand. And a public company has to communicate that they're going to go out and buy Bitcoin. And by the time that they go out to buy Bitcoin, the price might have run away. They might have signaled to the market. Like if you said, like what you said with Apple, signaling that they're going to they're going to go buy 5% of their balance sheet into Bitcoin. The second they make that announcement, the price might be up 50%, and then it might take them 2 months before they can actually deploy capital. And so the price has been running away from them for 2 months when they finally actually start to put money into their Bitcoin position. So there's a real disadvantage in some ways to the public companies. If you're not going to issue stock to buy Bitcoin, if you're not going to tap the capital markets and you're just going to purely take the cash on your balance sheet to buy Bitcoin, there's almost an advantage to the private company who can do this quietly and accumulate a stack and then announce it after the fact.
So Apple, and I have no clue about the rules for publicly traded companies, Apple's would have to announce that they will going to do that before they can actually do that. So they cannot buy 5% of the balance sheet with Bitcoin and then announce, hey, we bought 5% of the balance sheet with Bitcoin.
You know, it's It's a good question. Like, do they technically have to signal that strategy change? I think so. But even if they didn't, they would feel the need to communicate the plan to shareholders because what they don't want is to surprise shareholders. That's maybe one of the reasons that these companies like the Mag 7, which are basically treated like savings accounts for, people's retirement income at this time, at this point, um, what they're really trying to do is not surprise the market because they understand that they're being treated as the piggy bank for basically every retail investor, pension fund, etc. So their goal is not to shock the market because they don't want the volatility in the share price that MicroStrategy is purposefully manifesting.
It's so sad. It's so sad because the stocks are now treated as savings vehicles, which shouldn't be there. And because of
Crazy.
that dynamic, now companies have to make decisions to not rock the boat. But as a business, you have to rock your own boat to be a business also in the future, not just now, because businesses are always evolving and there's always something new coming. And if you're not adopting a new strategy, you will be left behind. I never never looked at that way of the company also having to look out for their shareholders because they treat it as a savings vehicle, and they might be not okay with a 10% drop, even though it's a great strategy for the long run.
Yeah, it is sad, and it's also really kind of a commentary on the quality of the savings technologies that we have in the market pre-Bitcoin, that we were treating companies as savings accounts, treating public company equities as if they can never go down. And then when you do see down days, you see the entire American voting public basically begging Washington, D.C. to bail out or change course on tariff talks to make sure that their 5 or 4% dip in their savings account, which are public equities, that those can recover because they really people are investing in the S&P 500 today as if it can only go up. And that's very scary in a world where Bitcoin, automation, and AI can disrupt these companies that are also at really, really outrageous price to earnings multiples. I think Nvidia at sometimes hits like 200 years worth of annual revenue as their valuation. So you'd have to hope that that company can maintain that level of revenue for 200 years to pull in the value of its market cap. That seems unlikely.
So interesting because you brought up tariffs. I just want to show that to people quickly on the screen, and it's so fascinating also how the mainstream media, not only in America, I guess, but I saw it from the Austrian and the European mainstream media. That's the S&P 500 year to date. So from January 2nd to what we have here, 23rd of April, and we had that short shock here. I mean, shock. Like it's 11%. Yes, it's quite some percentage for an S&P 500, which is supposed to be the savings vehicle, which it isn't, obviously. And I seen the mainstream media react as if there would be an pandemic in America that is kind of rotting out 50% of the population. It's like the world is going down. It's like everything is breaking down. Like the whole world is collapsing because Donald Trump is putting tariffs on and the stock market is like 10% down, which is laughable. And it shows how insecure people are about their finances because they haven't really investigated what money is and how they should treat their own savings.
Yeah, and these are 500 companies that all can dilute their shareholders, right? They can all issue new shares. So the world basically treats the S&P 500 as their piggy bank, but it's not a hard asset. There is no true scarcity. These companies can print equity shares to do things like buy Bitcoin or make a acquisition or merge with another entity. There's a lot of things that they can do, and they're printing shares constantly. So it's kind of scary how much the world thinks that the S&P 500 is their piggy bank.
With the printing their own shares, I never 100% understood that, because for me, it's like they can only give out shares that are existing. Maybe I have not enough knowledge
No.
around that. It's like, can they have over 100% of their company shares, or like, how does it work?
So you would have kind of in your articles of incorporation, you'd have a certain number of shares, call it 1,000,000 shares, and then you would distribute those out to the founding team, maybe some advisors, you set them aside for investors, maybe even set aside a pool for future employees. But you can always issue new shares. So if you think of a startup that does, a seed round, they're issuing new shares to new investors, right? And then they do a Series A round, they're issuing new shares to new investors. Now they're hoping that the total value of the enterprise is going up fast enough that the share price is maintaining its current price or increasing in price. But companies are constantly issuing new shares, diluting the existing holders in order to bring in more outside capital. This is one of the things that we find really interesting at Acropolis is the startup use case for Bitcoin on the Treasury. So if you imagine a company goes and raises a Series A round, they raise $5 million. They need to deploy $1.5 million over the next 18 months. And the rest of it is really just kind of cash on hand. If they put that into Bitcoin and they run a lean operation, by the time that they would have otherwise needed to go out and raise a Series B and dilute the ownership even further, which is also a huge time sink and distraction for the executive team to be fundraising. If instead they were holding Bitcoin and Bitcoin appreciated, they might never have to raise capital again. They get to maintain the ownership at the point of that last round. And they get back to focusing on their operating business instead of, constantly worrying about which milestone and story they need to create in the market so they can go successfully raise the next round of capital. So, it's you can always print more shares in the company, and the only time that it maybe makes sense is if you are accreting. And this is something that's interesting about MicroStrategy is it's what they kind of call accretive dilution. They're diluting their shareholders with more shares, but they are accreting more Bitcoin per share faster than the share increase. So when they dilute the shareholders, those shareholders are actually getting more Bitcoin per share over time. That's what makes MicroStrategy's story so interesting.
Super interesting. It's really weird that they can print down, because I always thought like you buy shares and you have a percentage of the business, and then you just have the percentage of a business and they cannot dilute that percentage. But what you're saying is basically you don't really have that percentage and they can dilute your percentage with making more shares. That seems stupid.
Yeah, there's only ever 100% of the company, but if you owned 5% of the business and then I go and we raise a round of capital and $1 million comes into the business, well, your dilution, you might have been diluted from 5% to 3.5% of the business because we had to give away some new shares to the investors.
Then
That's why founders typically start with maybe 50% of their business. And then if you look at most public companies, CEOs, they end up owning maybe 7 to 12, 15% of their business once they get all the way through the funding rounds into IPO.
That's interesting. Makes stock investing even less appealing now.
Well, and it tells you why there's so few Michael Saylors out there who are still majority shareholder owners of their business, is because to get all the way through, many years of operating the business, many funding rounds, all the way through to IPO, it's very hard for the founder to maintain the majority shareholder ownership of the business.
Absolutely, yeah. You said something before that stuck with me. You said Bitcoin strategy officer. Is that a real thing in a company already? And shouldn't that be the CFO?
Dylan LeClaire has kind of pioneered that role. And I think it makes sense. Ultimately, I think every company will hold Bitcoin, and so every company will either have an in-house Bitcoin strategy officer or a outsourced Bitcoin treasury team. And so that's becoming a modern role for obviously a Bitcoin treasury companies only. If you're not holding Bitcoin, it doesn't make sense. But if you are, Bitcoin does have these unique properties that are different than the treasury bills or cash in your bank account. And so it does take somebody with some Bitcoin expertise. And believe it or not, the only thing as scarce as Bitcoin right now are Bitcoiners with corporate finance backgrounds that want to help, other companies move in this direction.
That's true. Yeah, there's not. I mean, they're getting more, but I think the demand for them is getting faster and more than they're actually getting more.
Definitely the demand is outpacing the individuals because fiat world is also really attractive, right? A lot of these corporate finance professionals, investment professionals, they're making great money and they're converting those paychecks into Bitcoin in their personal lives. So there's, you have to really want to be full-time team Bitcoin to make the leap from fiat world into Bitcoin only.
Because they could make more money being in the fiat world and just stacking Bitcoin.
Yeah, doing it for their personal lives rather than for a startup or a business, for example. Yeah, and you could get paid, like if you're a Bitcoin strategy officer, I'm sure to some degree, Dylan LeClaire is being paid out in large part through equity, right? So he's probably getting paid out in shares of MetaPlanet to align the value that, he's creating over there. But, and that's probably a good use case for Bitcoin strategy officers in the future. When they join a company, they get paid in stock, so they can go aggressive to try to grow the share price of that stock through Bitcoin acquisition. That might be a way that you can kind of incentivize people from the fiat world to join these smaller companies and take on the Bitcoin treasury role.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in the jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. I love when people get paid in what they're actually delivering to the company. I love that model always. I was always a big fan of that, getting paid by what you bring and not for your time.
Definitely. Yeah. The eat what you kill model. What we do at Acropolis that's kind of interesting is when we custody Bitcoin for our clients, we charge basis points on the amount in custody. So our goal is aligned with the company to grow their Bitcoin position and take the long time horizon view with them that Bitcoin is going to appreciate over time. And we participate in the upside with the client. So super aligned there, and we're not actually adding any new overhead costs to the business.
You also said something that is more and more in the words of people that talk about Bitcoin and corporate treasury. It's Bitcoin per share. For the people that don't know about it, what is it and why is it important?
Yeah, so we actually put out about a month ago the world's first Bitcoin per share calculator. So it's a calculator where you can, if you're a company, you can look at, okay, if I raise, X amount of debt and use it to buy Bitcoin, how will that change the amount of Bitcoin per share in my company? Or if I raise an equity round and I use it to deploy into Bitcoin, how will that change the amount of Bitcoin per share? So for example, if you buy MicroStrategy, yep, there it is. It's pretty neat tool, the first of its kind there. And so if you buy MicroStrategy, you can actually work through the numbers and say, okay, MicroStrategy has so many shares and they have so many Bitcoin. So if I just divide, those two numbers, I can find out how much Bitcoin is represented inside of each share. And then you can track that over time. As they create more shares, they're diluting you, but if they're acquiring Bitcoin more quickly than they're creating new shares, then you're actually getting more Bitcoin per share every time that they issue new shares to buy Bitcoin. So this is a neat tool where any company can basically say, okay, I'm thinking about raising an equity round or a debt round, but I want to make sure that I am making it accretive to the Bitcoin per share and that we're moving forward, not backwards. And this is a really quick, free, open source tool to do that.
That's really cool. I like that. And it's also basically just so you know, very easily to find. I just put Bitcoin per share calculator out, and it was like the fifth side or something like that. So you did a good job also on the search engine optimization there.
Yeah, we're getting better at that. Yeah.
Really cool. What is Bitcoin yield? Is that how many more Bitcoin you've accumulated?
Yeah, so that's exactly right. That's the metric that MicroStrategy likes to talk about the most, because you can be accreting Bitcoin per share, but what really matters is the Bitcoin yield gives you kind of a more holistic view at that, so that you can create like an annual Bitcoin yield. So you can say, hey, shareholder base, this year we grew Bitcoin yield by 15%. So, every share got 15% more Bitcoin represented in that share by the end of the year.
So it's similar to, because individuals don't have individual shares, it's similar to saying, hey, I started with 1 million Satoshis and at the end of the year I have 2 million Satoshis. Then I grew the Bitcoin yield, my personal Bitcoin yield of 100% because I basically 2x'd, but for a company broken down per outstanding share.
Yeah, except the difference is that when you buy a share of MicroStrategy, you don't have to put more money in to get that Bitcoin yield. It's their operation that is creating that. So they're basically creating more Bitcoin in your share for you. You can think of it as like them buying the dips on your behalf, or them DCAing more Bitcoin into your share on a weekly basis, because they make their buys basically weekly at this point. And so, yeah, you're getting more Bitcoin out of that share without ever having to put up more money. Whereas as an individual, one Bitcoin is one Bitcoin. So if you buy one Bitcoin and you want to get it to 1.06 Bitcoin, the only way you're going to do that is by coming up with more cash to buy more Bitcoin with. Whereas when you buy MicroStrategy stock, the Bitcoin is actually increasing over time without you having to come up with more cash.
Super interesting. I love that you open source that tool also and put it out there for free. I also love that because some people like to do that. Like there's a calculator and then you have to put in your email to get results. You put it the other way around. So you put in the things, you get the results, and you can choose to give the email. I like that approach a lot.
Yeah, thank you. Yeah, we're trying to do everything we can. Like I said, I've probably said the mission 3 times now, but it's maybe worth repeating, to simplify and scale corporate Bitcoin Treasury adoption worldwide. And the way to do that is to take the tools that we're working with our clients on and open source them as much as possible. So whether that's research, playbooks, calculator tools like this, on that same page, you'd actually see that there's a Bitcoin-friendly convertible note and Bitcoin-friendly safe. So these are the types of financing documents that a startup would use to raise capital. And what's on there is we basically give you the legal agreements that you need that provide you cover if you want to use some of the capital you raise in a round of funding to buy Bitcoin, so that you don't have to piss off investors or them come back to you later and say, hey, you never said that you were going to use any of these funds to buy Bitcoin with. Well, this kind of, in a very subtle, clever way, allows you that wiggle room through an additional clause there in that we call kind of treasury management and use of funds.
Awesome. Now let's come to MicroStrategy, because it's such an interesting company. As we talked about it, they grew their own Bitcoin balance sheet quite aggressively. What is the role of MicroStrategy, or sorry, strategy? It will be very hard to get that micro out. What will be the role of strategy? What is the role of strategy right now in Bitcoin, and how do you think the role will shift for strategy within the next 10 years? Obviously, only Michael Seyr can really answer that, and he even only to a small extent. But what do you think will be the role in the next 10 years?
So today, and I don't think that this has been totally appreciated by the Bitcoin community. Today, what MicroStrategy is doing is they are securitizing Bitcoin so that the rest of the market, these other pools of capital that are not able to buy spot Bitcoin, can participate in Bitcoin exposure and Bitcoin's upside. And so they do that through their common stock. They do that through kind of fixed income securities. So they're creating what I kind of think of as a menu of Bitcoin securities with different risk appetites, so that all of these other pools of capital, like the bond market or fixed income investors or sovereign wealth funds, nation states, whoever, can actually engage in the Bitcoin ecosystem at a risk tolerance and in a compliant way with whatever rules they have to follow within their organization. So they're securitizing Bitcoin, basically making it an easy on-ramp into Bitcoin for the rest of the world that doesn't want to hold spot Bitcoin, doesn't know how to, or has certain laws that keep them from doing so. As far as what they will do, maybe 10 years from now or over the next 10 years, I expect them to just keep creating more and more Bitcoin securities to go after more and more pools of capital. And as interest rates come down, these fixed coupons that they're providing on some of their securities, they're going to become incrementally more attractive to the market. I think long-term, MicroStrategy's bonds will compete with government bonds, because the US government, you can say it's backed by, the world's largest military and the world's largest economy, et cetera. But when you invest in a MicroStrategy bond, you know that they're backed by actual digital real-time collateral in the form of their Bitcoin on the balance sheet. And I think that seems less risky than a nation state that's $37 trillion in debt, and all the political swings left and right and back and forth every 4 years. So if I were a bond investor, I would be looking at MicroStrategy, because you're getting a higher coupon, you've got more collateral on the other side of it, in a company that is not $37 trillion in debt. And so I do think, and Michael Saylor said so, that he wants to get to 1% of the $300 trillion bond market. That would mean $3 trillion worth of bond market capital into his stock, which he would convert those 3 trillion into Bitcoin buys. And at their premium, that would probably value the company at something, if you just put a 2x multiple on that and you were conservative, you'd say that MicroStrategy will be a $6 trillion valuation company at the point when they achieve 1% of the bond market. And today they're worth somewhere around 100 billion. So there's a lot of room to run. And I think they have such a great strategy right now that they're basically operating this strategy with 5 to 10 people on their treasury team. They're out there. We're actually putting out a report in the coming weeks, MicroStrategy versus NVIDIA. So these have been the two best performing stocks in the market over the last 5 years. MicroStrategy has beaten NVIDIA, and they've done it by simply buying and holding Bitcoin or issuing shares and buying Bitcoin. Whereas NVIDIA has all of this CapEx expenditure into chip factories and technology, and they're affected by things like a trade war where there's tariffs on the goods and services moving in and out. And so people like to tease MicroStrategy that, oh, there is no product, there is nothing there. But when you're in the midst of a trade war and increasing tariffs, it's actually beneficial to that company to not have these drags on their operations. So MicroStrategy is beating NVIDIA with basically 5 to 10 people.
That's so cool. Hearing that and seeing that comparison, I don't know if the comparison is fair, but it's almost like they're opening a black hole for all those fiat assets and converting them directly into Bitcoin, and then just opening that hole a little bit more to suck in more fiat to gain more Bitcoin at the end of the day. He's basically doing what he's saying since 2020. He's like, hey, I discovered digital Manhattan and I will buy whatever I can.
Yeah.
And it's so nice to see this consistency behind his strategy.
Yeah, or another way to visualize it would be like he's got a swimming pool and there's an ocean out there, and he's kind of digging little channels so that the water from the ocean can start pooling and funneling into his swimming pool. And his swimming pool keeps getting bigger and bigger, and he keeps digging new trenches to pull in more of the ocean water into his pool. He's finding new and creative ways to basically tap that giant pool of capital like the $300 trillion bond market.
Awesome. What do you think will come to treasuries overall for Bitcoin treasuries and for companies that adopt Bitcoin? You said like you're really bullish on the companies that don't have something exciting to invest. They kind of search for a second chapter. What is kind of your expectations over the next 5 to 10 years?
So I think the excitement around a company announcing that they're a Bitcoin treasury company is already starting to wear off. Obviously, the early adopters of that get more of the love and appreciation from the Bitcoin community. And now it seems like every other day we're seeing a new company announce that they're adopting a Bitcoin treasury. And so some of the marketing magic is wearing off. And so I do think we're getting to the point where companies are going to do this and they're not even going to necessarily expect a PR push around the announcement. It's just kind of going to be an obvious no-brainer, like back in the early 90s or something. If a company adopted a website, put up a website, it might have been worthy of an announcement for the first few companies that created a website, but after that, every company, it's kind of expected that you have a website and an email address. I think we're getting closer and closer to that here, where that's not the exciting part. And I think that that's good, because this is really just savings technology. Like, this should not be treated as a marketing push. This should be treated as a way of protecting the value you've earned through your operating business into the future forever, so that, maybe businesses never die. You can have companies that are built on Bitcoin. And theoretically, if a company had a significant Bitcoin balance sheet and their operating business just wasn't working anymore. They couldn't grow it anymore. They were, costs have gone up too much because of inflation. These companies could ultimately scale all the way back and just sit on their Bitcoin positions, and they could still be creating value for the founding teams and the shareholders. So what's really interesting about Bitcoin is when you need to scale back the operation, you can scale it all the way back to just your Bitcoin holdings, theoretically. And maybe in the future, when you have an opportunity, a new line of business that's worth going after, you can scale back up the operational side using the Bitcoin on the balance sheet to invest in that opportunity. And so I see a lot more flexibility where sometimes companies are leaning in. Maybe there's a decade where they lean back and they're just kind of sitting on their Bitcoin, waiting for that opportunity for them to jump back in the operating business.
Is there something outside of Bitcoin treasuries what you're kind of expecting for Bitcoin to come? What are you kind of excited for outside of the corporate world in Bitcoin?
Well, obviously, the United States doing the strategic Bitcoin reserve and promoting the Secretary of Commerce and Secretary of Treasury to look for budget neutral ways to acquire more Bitcoin for the reserve. It's it can't be stated how bullish that is. That is the starting flag to the race for nation state game theory and nation state adoption. And I think it also killed the biggest piece of FUD that Bitcoiners often hear from people who are like, yeah, Bitcoin's too good to be true, so the government's going to ban it. Well, it's like, well, the government is now actively promoting it as an emerging store of value, digital gold, and creating a strategic reserve for the nation. So are you sure that that's still relevant? Because it seems to me that Bitcoin's incentives have done exactly what every Bitcoiner thought they were going to do, which is that Bitcoin is for everyone. It's for your enemies. Nations are going to want it. Businesses are going to want it. Everybody's going to want it because it's just a superior form of savings technology, and it solves one of the greatest problems in the world, which is long-term capital preservation. So I'm really excited for the nation state game theory to play out. I was actually optimistic that it would be happening at the speed that we're seeing it at, but at the same time, the election could have gone another way in the United States, and we might have seen another 4 to 8 years of suppression of this technology, and especially on the world stage. So I'm really excited for what happens when the EU decides to embrace Bitcoin, when Russia and China, who are starting to settle trades amongst each other in Bitcoin, when a bigger percentage of that starts taking place, when India and Pakistan and all these other, Brazil, all these other large countries start to adopt even a small initial allocation. Because what we all know about Bitcoin is, once you get a taste of it, once you've been through a cycle, once you've seen it appreciate, and you realize that there's no maintenance costs and you can kind of just set it and forget it, that I think this is really going to usher in what will ultimately become the new global reserve asset and unit of account and trade vehicle amongst nations. And if that comes to fruition, it's just to the benefit of every citizen in those countries. Because if the nation is adopting the technology, it gives protection to the citizens of those countries, and it also justifies a personal investment for citizens in those countries. And then we're really off to the races, and Bitcoin starts to revolutionize the lives of everyone on the planet, and people can start to own and keep the value that they create in the world.
What an ending point to to the podcast. I love that, and I couldn't agree more. I think Bitcoin is one heck of an asset, and it's just a matter of time till everyone on an individual level, on a company level, and on a nation state level will come to the same conclusion. No matter with what incentives they're driven, they will find Bitcoin. We have a question that I asked each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
What can you learn from me besides Bitcoin? I am kind of a student of startups. I've spent so much of my life trying to learn how business works, how businesses can get off the ground. So entrepreneurship as a kind of form of study for me has been really foundational in my life, and I do think that the world is moving more towards entrepreneurship in general. Things like AI and all these software tools and working remote means you can have businesses get to hundreds of millions of dollars in revenue with one or two people working at them. So I do think that we're moving to a much more distributed world. Instead of companies with hundreds of thousands of people working at them, you're going to see millions and millions of companies with 2 to 5 person teams. So you're going to see a lot more nimble, small, lean businesses that are leveraging these tools and leveraging not having to pay for an office, and just kind of hiring who's needed and only who's needed, and letting these tools do the rest. So I guess if you listen to me on like the New Foundations podcast, our podcast at Acropolis, you're going to hear a lot about how businesses can adopt things like a lean startup methodology, and how when you use your incremental dollar to buy Bitcoin, you're positioning the business with a lot of optionality in the future. So I guess anything to do with entrepreneurship, startups, small business, that's kind of my other sweet spot.
Love that. I mean, there are already those small companies starting. We see that more and more. And I just talked, I think it was just today in the morning, where I talked with someone on the podcast, where he was like, he's really excited for the first 5-person, $1 billion company,
Right.
that is literally like very small, has some AI agents, and the team is basically just like the founders and maybe one other person, and like, or just a collection of some small freelancers that work together, and they leverage technology to the widest. Yeah, it's a future that is coming closer and closer, and is really hard to understand for those who are in big corporations and think there has to be like meetings for everything and stuff like that. And I'm very much looking forward to that small, decentralized, nimble future of companies. I like that you brought that in.
Yeah, it's coming. It's already starting, and whether people like it or not, that is what the future landscape is going to look like. It's going to be small teams leveraging AI and freelance workers in all over the world, because now talent is global. When you're working like we do most of the time, just from a Zoom link or a Google Hangouts link, everybody can work anywhere, and you can have a freelancer who's working 5 different companies, almost like an Uber style. And there's advantages and disadvantages to that, but it's never been a better time to start a business.
Oh, awesome. Absolutely. I also have maybe too many, but 3 freelancers working on the podcast on the back end of it. And it's just so amazing, because everyone is exactly there for one task, and it's super efficient and very, very nice to work with all of them, and very like there's no administration overhead really, because like there's like those areas and they do the work and they do a fantastic job at it. It's really nice to see that in action, and they are like everywhere, like Colombia, El Salvador, Austria, like it's basically all over the world, which is amazing to see.
Yeah, no, and it makes it better because you're getting the perspectives of people all over the world, and yeah, the business is going to bring people together now more than it ever has.
Absolutely. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asks you the question, what do you think will be the role of Bitcoin for human rights?
I think Bitcoin has already done for human rights one of the most incredible things that it could possibly hope to achieve, which is providing property rights to all. I think property rights is foundational in society. You can look at the founding of the United States of America, the founding fathers took property rights very seriously. Without the ability to own what you create in the world and protect it, safeguard it, keep it from others who want to take it from you or feel that they have a claim to it, you really don't have an incentive for people to wake up in the morning and create value for society and make the world an incrementally better place for the next generations. So to me, Bitcoin represents property rights for all, and unconfiscatable value and wealth creation for all. So property rights, that would be my answer there.
I love that. That's really cool. Before I let you go, where can people find you and ask you questions?
You can find me on Twitter at Chase Palmieri, all attached, or you can email me chase@acropolistreasury.com. And if you're a business owner that's interested in how Bitcoin might have a role to play on your corporate treasury, you can go to acropolistreasury.com/book.
Thank you so much, Chase, for being on. Thank you so much also for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.